December. Just had the chart alarm go off on BITO at $20. Do we have Bitcoin cracking the old 40K handle? Yes, we do. 41.5. Oh, baby, let's get going. Let's start off with a risk disclaimer. Know this risk in trading. Please know is your trade capital only. You know the deal. Social media, best place to find me is youtube.com/Chris Pulver. Verified Twitter account at Chris Pulver, and then all the sessions I do live, you'll hear me talk about my Discord channel. The server is called Chris Pulver Trading, and you can pop in there for a free group chat. I drop all my analysis, content, courses, and strategies, stuff like that. So check it out. Let's get into the charts. So this is BTC. Bitcoin's up to 41.5. A pullback would be nice. I'm glad I converted some Ripple around 36, and I'd like to add some more around 33 to 32. 48,000 is the next high, and it appears that the market is pretty interested in going higher. So BITO, this is the ProShares ETF. We're at 20.69. I've got some bull put spreads with I think it's like 12 by 11, 16 by 15, 17 by 16s. I started layering a bunch of credit spreads and trying to generate some income. PayPal at 60. Is that coming up? Yep, PayPal is going up a little bit. Okay, how's the SQ doing? Pushing up higher as well. Okay. The SPY gapped a little bit lower. We had a close yesterday or close on Friday at 459 and change, and we're opening at 455. So high and close 459.65, close 459.10. Last week ended up having a big push on the DIA. We had this 354 by 347, closed all the way up to 363, over $9 from that position. The IWM had a 181, got all the way up to 185. So good stuff on those positions for last week. Again, not expecting a ton of volatility. I mean, look, if the Russell ends up going for this low at 163 and rips all the way up to this 199, that is a heck of a gap close. And when I don't mean like an actual gap in the charts, I mean the underperformance of the small cap compared to the Nasdaq and the large cap. That would be a 22+% rip to the upside. So pretty wild stuff. Let me check earnings this week. If there are any, it's probably really light. We might actually be done with it, or close to it. Let me check. So let me check my little Sunday rip. We've got some news, earnings. We have 104 companies this week. Anything notable? We got some JM Smucker for some food and consumer staples. We have some Toll Brothers for builders, Dave & Buster's for some play, Campbell's Soup for some staples, Chewy, oh baby, a little Chewy action, GameStop, if anybody cares anymore, just watch the documentary, Dollar General, Lululemon, DocuSign, Johnson Outdoors. Okay, never mind. I thought it was Johnson Johnson. Nope. Okay, so I'm going to take a look at Chewy. That's a stock that I have some ownership in. We're sitting at 1881 with earnings approaching on Wednesday after market close. So, I kind of want to take a trade on Chewy this week. I think there's enough volatility around it, but I'll crunch the numbers and see what it looks like. I'll just do that now, I guess. We'll talk about it at 10 o'clock in Equities on Demand. And let me log into YouTube and say hi to everybody. Hope everyone had a great weekend. Got back late last night from a conference. DC was great. A little time in Chicago. All right. Good morning, Angela. Good morning, Chris. Good morning, David, Jacob, Denise, Keith, Jan, Donna. Good morning. Nice to see everybody. And happy Monday. Okay, Gary, good morning. How are you, sir? Okay. So let's take a look at Chewy and see. So we have 13.6% average earnings. I don't have a ton of data. We've got some earnings day calculations, 9 to 13%. I would probably be conservative and say we've got an 11% move. 11% on an $18 stock is obviously not a big move, so it's going to depend on how I can price out my options. If I would have a 50-cent increment, it might be worth considering. So 18.90. Let's say the average is 1366, 11.29. I'll take the lower of the 11, so I'll do 11.22 on average. So I'll take 11.22% times 195. So looking at about a $2.12 move If I go into my account, I'm going to see what that. If there's 50-cent increments, then it might be worth taking a straddle or strangle. I'm going to take a look at it. Let's find out. Okay, so Chewy right here. And let's look at a strangle. So we're trading at 19 bucks right now. If I looked at a straddle at the money, 19 by 19, that's going to cost me $3 for a move. That should be $2. That's overpaying. Um, the average weekly move for Chewy, let's find out that. Average move for the week is 272. So it looks like I'm overpaying for a straddle. If I get a strangle on there, I'd have to check the deltas. I'll have to log in my other platform. I can do that right now. Let's figure this out. This will be easy to chat about. So I like I said, maybe this is again kind of a low volatility week. I don't want to force any trades. Last week I actually felt like I got lucky last week with just IWM and DIA had a nice push like Thursday, nice push Friday. They both ended up being a profit as opposed to, I think, Wednesday, Thursday, it was Dow was up or the DIA was up and the IWM was upside down a little bit, but it was a break even or better. So traders were protecting anywhere between like 30 and 80 cents just on, I think that was Wednesday or Thursday. And then a big push on Friday, new highs for the DIA, pushed up against the yearly highs. The IWM making a nice comeback, breaking some fresh highs recently, not the yearly highs. But again, light on the calendar. I might take a look at Toll Brothers. I might take a look at. We'll see. Maybe I don't trade earnings this week. The expirations I have out right now that I'm mindful of are the 15th, and they're on the SPY. So a 456. I mean, I could look at just the SPY this week, but we have non-farm payroll on Friday. That's the big news event. Um, Nothing really crazy that I saw. Swiss CPI came in negative -0.2. That's good. So I think the Swiss National Bank will continue to hold rates as is at 1.75. Aussie cash rate is going to be Monday night, so 10:30 p.m. Eastern time. Expecting to stay the same at 4.35 on their official cash rate. We've got the services PMI numbers, job openings for the U.S., GDP for the Aussie, Bank of England speak. We got ADP non-farm. Bank of Canada expecting to keep the rates the same at 5%. Unemployment claims for the U.S. on Thursday, and the non-farm payroll. Any staggering numbers here. Average hourly earnings, 1/10 higher perhaps. Non-farm, we've been pretty steady along the way. So we've had some misses, but there's been just steady job prints. We've had a bit of a slowdown. You can definitely tell that these big 200, 300, 400, 500 prints have slowed down a little bit. 209, 187, 187. This is a big one from October, 336. I wasn't sure if that was holiday trading. I don't really know what that was coming, or not holiday trading, holiday hiring, but probably not because we're getting November. I mean, we're in the thick of, Black Friday's come and gone, Cyber Monday's come and gone. We had all these retailers that are cautious moving forward, but for the most part, the melt up continues, and I'm not looking to fight this market. I think that we're getting still some risk appetite. The dollar index is still, did a great job coming down where we wanted it to off of these resistances at 107. Maybe a pullback and another push on the dollar, but I don't think the dollar is going to go too much lower than 100. So just be prepared for some range bound trading on the dollar. We did a great job protecting some profit the last couple of weeks. We made over, I think, 1,200 pips on the dollar crosses. Aussie dollar, New Zealand dollar, Euro dollar, dollar yen. Dollar yen continues to do okay. We are sitting at, this is the weekly time frame, so I'll lighten this up to like the daily. So the dollar yen continues to go lower. We had a swing trade on this one, so high to low, pull back in here on 149, sold it, and now it's down a couple, or it's up a couple hundred pips in profit. So I'm looking to see if we still get a pullback. If we have a high, low, lower low, and it pulls back for a flat pattern, I'm still going to sell it and look for lower lows. So take out this low, challenge, challenge. Let's see how much downside we potentially can have. Even if it was just a corrective swing, getting down to like a 618 extension or coming back to past resistance, becoming support that's around 145. So I still like bearish on the dollar yen until 145. And it's one of those trades where if you just put a stop loss to like plus 50, if you're up a couple hundred pips, put it to plus 50. And if it runs, let it run. I wouldn't even care outside of just letting it run. Alrighty. Let's see here. The Nasdaq pulling back off of these fresh yearly highs. We're trading at 386. We've got some gaps to fill. I might look at this going into next week, see if that area gets hit. It would be nice to see one gap fill. I mean, come on. None of these indexes have hit gaps. Look at all these gaps to the downside. So we have one today where we gapped lower, and it would be nice to see maybe a pullback into this zone here, and then maybe settle in. So this low, this high, pull back in, fill a gap, or fill this. This is a little bit more equilibrium if we get to like 370 on the Qs, and then see if this area is justifying a continuation for December and into January, February, into Q1 next year. We talked about this last week, or I posted a video on this maybe on Friday with my Traders Pass 100%. If you go to the CME Watch tool for the Fed, there is a potential uptick in the March expectations. So 99.7% probability Fed's not going to do anything December 13th, but you go into the new year, January, still expected to pause with a high percentage. March, the market did switch. So last week when I looked at this, I think if you check out that video from Friday, this was 40, maybe 41%, and this was 44%. And now it looks like we have the rate cut expected by the markets. Again, this could be wrong. This is subject to change, but the market is expecting a rate cut in March of next year. So that's a big shift from June. So that higher for longer, that pause, June, then it got pushed back to May. Now it's looking to seep into March. So the Fed may be cutting rates way sooner than the market anticipated just a couple of months ago, which is also why this market's probably sustained a bit of a rip to the upside. I think a pullback is necessary, but I'm still pretty darn long. GBTC, ripping some fresh highs. BITO, fresh highs today at 20. Is this a dividend at 12 cents? Okay, and then we got some news. Bitcoin hits fresh highs. There you go. So Bitcoin hitting 40, breaking that 40K mark. I was literally just talking about this yesterday in the hotel. I was like, man, it's right at 40K. I'm like, if it breaks, that's great. I'd like to see a pullback, but I just think we're getting aggressive, and that's okay. This is what the bull market looks like in Bitcoin. We might not have a pullback. If we do have a pullback, now wouldn't be bad. I'd like to see a pullback. If we break the 48K high, I don't know. Maybe this was enough, right? Maybe. But if we get a pullback, I hope it happens before we break 68. I think what's going to be disappointing is if we break 68, in my opinion, I think we're going to 100. So if it hits 48 and then pulls back a little bit, I would like to see maybe this is a bigger head and shoulders pattern. Maybe, right? You got some left structure here. You could have this big rounded out pattern, hits 48,000, forces a neckline, and then pulls back, and we start to look at more accumulation. I would definitely be accumulating in here. And then adding on a breakout, and all of a sudden we're going to get measured moves from the technical side for 3 to 5 waves. So there could be all sorts of great stuff happening in the technical sides where it's like, I like this level, looking to take some profit, protecting profit. If I'm in for, $10,000 here and it's up from, 20K to 100K, that's a 5x return. Turn 20K into 50K, I probably take some profit, keep some of that in there for a full position. And if we have big pullbacks, okay, fine. But again, risk capital. I keep saying that about Bitcoin, but I don't think we can argue or deny if anybody's holding any crypto, any Bitcoin. It's got to be pretty exciting. Ethereum, same thing. We're breaking some fresh highs at 2135 and 2150. I said that if we break those levels right in here, that's that, like I said, 2030 and the previous high at 2140. The next high, this would be a run on Ethereum. I'll just put a horizontal line here. We break that level, this is my next spot at 35.75. There's another 50 to 60% upside right there. That's a 66% move just to get to that previous high. If we break the all-time highs, then we're talking 128%. I'm pretty sure that is a bigger return than Bitcoin right now. If Bitcoin breaks 68K from 41, I don't think that's a 128%. That is 56%. So, not saying I want to trade Ethereum over Bitcoin, but obviously 120% is more than 55. So, take your pick or do both, right? Get some crypto abundance in there if you got it. Okay, what else? Trish, good morning. Donna, good morning. Thanks for all the thumbs up. Yes, I appreciate that. And good morning. FK, good morning. Nice to see everybody. Saying hi in the Discord channel. Let me post that, by the way. Free group trading. Here's my link. Copy. And join my free Discord channel. There you go. Any other charts you'd like to take a look at for this morning? Like I said, currency strength chart, we have the dollar and the yen. We've got the CAD creeping up here. Let me take a look at oil. We did dollar index. I'll go back to that really quickly. So dollar index at 103.61. If we're going to continue to see stocks melt up a little bit higher, the dollar's subject to go down. I think that 101 is a strong support level. 100 is certainly a strong support level. I don't see the dollar going too much lower than 100. So that would be a way that the yen possibly plays out is if the dollar goes down further, dollar yen goes down with it, stock market continues to rally. If we end up getting the dollar down to 100 or slightly lower, I would look for another bounce in the dollar back up. And again, it's not doing any major damage. It would just be a broadening pattern that continues to play out a little bit longer. And that could also help us signal in time a little bit more of a top and when to protect some profits in the stock market and possibly when to get out of the dollar yen if it's going to continue to go lower if the dollar gets weaker. So I think it's a good chart to pay attention to. We'll go to oil, which this is why I said don't buy oil until we are one, back down to previous support, or two, breaking the trend line. So it is at neither, right? We're not at support yet, which is around this $68 level. We've got some wick lows lower than that, around 65. But if we get down to this level or we break this trend line, that's about the only spot I'm looking to go long in oil for a range trade. Okay. I mean, I want to see oil kind of consolidate over here, but do it on the right hand side of the trend line and see if it goes back up to 85, 90 bucks. Just be a range trade. Gold and silver. Holy Toledo. All right. Somebody give me, let me get another price feed to validate this. Did that actually happen on gold today? Let me get another price feed. That seems a little wild. Forex.com, spot open, Pepperstone. I mean, I've got, let's see, let's go to Saxo for gold US dollar. Yep, we had a freaking spike up to 21.32. I am guessing there is a lot of breakout trades sitting right there because that would not be the case to have a price action move like that for a daily wick that has a huge rejection. I mean, just for the day, that is a swing in gold of 4.5%. That's massive. And we're coming up to these multi-year highs that are just being spiked through. So, well, be careful on gold for this reason. I said this was a heavy resistance area. So a couple things: either one, people that were trying to short gold had stop losses, or two, there's buy stops up here looking to get filled and go long, and now they're really gonna have to make that decision of how much they're committed to buying gold, because this is not a good-looking candle for a long trade, right? That is a potential bull trap right there. So that's wild, man. I would say this: if gold returns back to these lows around 2030, if it takes out this low at 2030 and this trend line breaks, I think gold just put in a top. So be careful on this. It could be a nice swing trade. If we test the levels or go a little bit lower, a little consolidation, gold might come back down and revisit some balance levels. Previous lows. This is a big pocket pullback around 1920 or so. Keep an eye on that. Keep an eye on gold. Did silver perform somewhat the same? Kinda. 25.89. I'm holding some shares of SLV. I want to see some credit spread stay above 23. It's trading at 22.90. You dirty dog. All right. Silver doesn't look nearly as volatile as what we saw on XAG, but we're getting some pullbacks on precious metals for right now. All right. We did some crypto. We did some oil, gold, silver. We did some dollar index. Any currency pairs you'd like me to take a look at? Stock-wise, I can just think A to Z right now. Alcoa is sitting up to 27.83. I've got some levels in to generate some income as long as price stays above $20. Amazon, we're trading at 143. I think I'm going to get in a protective put. I had one expire November 17th. I'm probably going to put out one towards the end of December, or maybe even going out to the end of January, just doing something. It depends on how expensive it is. If I get like a 140 or 135, something like that, where it can help lower my cost basis a little bit. But otherwise, I'm still holding. The good thing is I've got a covered call that's, a $2, $3 covered call that'll be looking like it's going to be full profit by December 15th. So I've got it surrounded. BITO's ripping to the upside. We've got some uranium plays that are up here at fresh highs at 29.30. I bought it at 26.95 with a bunch of credit spreads at $23. And URNM, another uranium play pushing up towards highs at 50 bucks. Okay. So that's off the top of my head. Pfizer's hanging in there at $29. We had some news last week on Pfizer. Put a nice little gap in. This is a good chart to take a look at from the longer term, daily time frame. I don't have it on this chart. I'll go to this chart. Pfizer on the technical side looks pretty darn good for a buy trade. Again, you might be going against the fundamentals of what's seeing the alignments right now, but technically speaking, a lot of oversold conditions with divergence. And what I noticed last week with that gap lower is we have a weekly level of divergence. So we're oversolding the RSI along with some divergence on my momentum oscillator. So again, that's anticipating where we could see a low form. We're sitting here at lows back in 2020, which obviously would be a pretty good place to buy. If we're going any lower than that, maybe these lows back into the teens. We got 2013, 2014. Before that, you're talking financial crisis levels at 12 bucks. So I still think it's important to have some protection. I have a long put at 30 that's going to be up some profit right now. Um, the rest has just been covered calls. So I still like Pfizer. I still think Pfizer gets up to 40 bucks or higher longer term. The lower cost basis, 5.6% dividend, probably solid dividend as well with a company like this. It makes a lot of money. Again, this isn't me saying everyone get into Pfizer. This is me saying I'm in Pfizer and this is what I'm doing with it. Okay. All right. CI 266 Cigna Group. What do you got here? Is this healthcare? Herschel, is this healthcare? We looked at UNH last week, United Healthcare. That's huge. We're coming up to these, all-time highs at 547. If you go to CI, Cigna, that's another healthcare group. We're fading off those levels. I would look for, maybe a bounce off this 200 EMA. I mean, it's been pretty solid. I mean, there was a lot of noise around it at the COVID crisis slash whatever 2020, whatever you want to call it. It was technical correction was needed. They just put a bow tie on it called COVID. But the 200 moving average has held pretty nicely. So if we came back down to that level, we could have a bit of a correction: high, low, lower, high, lower, low. But I'd be looking for a dip to buy and trade like this tighter range. I think we're going to get a lot of stocks that do that. We're going to have stocks that look like this, right? High, low, high, low, high, low. And some traders trade it, and some investors hold and just wait. I'm more of the former. I'm going to be a trader that trades it. So if I can identify some lows, I'm going to try to get in and maybe position myself for 1 to 3 months of income if I can. That would be the plan. Aussie CAD, Aussie dollar. Okay, Keith, I got you, man. Aussie CAD. Aussie CAD, I am long, and we're trading at just below 9,000. I'm going to try to hang on to this longer. I'd like to get my trade back to 9,100 or higher. I think Aussie CAD has room to possibly be a range. I mean, look at this high right here. Look at these lows right here. And if this has anything to do with it, this bigger swing on the Aussie CAD, I mean, heck, we might be forming a bit of a pattern right here as well. Maybe I want to stay longer on the Aussie CAD to get up to like 95, 96. I might change my profit target. I was happy because I've leveled into 5 entries on the Aussie CAD, and getting back to 91, I would have it's actually 6 entries. I'd have 5 wins and 1 loss if I get back to 9,100, and my loss would be a 45 pip loss, and the other ones would be like 1,200 pips of profit. So looking at this chart right now in the weekly time frame, based on this bigger swing, I think we could have a great range on this trade all the way back up here towards 95 or 96, as long as we're holding this low. I mean, this looks like pretty promising in my opinion. So yeah, I like the Aussie CAD long. I'm going to hold it. New Zealand CAD long. I'm already long. Stacked in some orders. We're still hanging in there. Same type of thing. This chart, low to high swing. All I'm looking for is I don't think I'm going to take this all the way up to a higher high. I'm happy right here around 8,800. So I've started to stack in this area, looking to add more to it and compound my profits up to 8,800. So that's Aussie CAD, New Zealand CAD, US for Aussie dollar as well. Let's have a look at that. Aussie dollar, I'm staying out of Aussie dollar for right now. We had a nice chunk of profit we built in for the last few months from like September, October into now, and the dollar cooperated. We grabbed I think 450 pips or 470 pips out of the Aussie dollar in the last couple of weeks. But it took us a little bit. We were holding positions since like late September, early October, and then we got paid pretty nicely. So I'm I'm good. Like I think I'm out of the Aussie dollar for right now. I think the same thing on New Zealand dollar. I'm out. We hit our profit targets. That's what I wanted. Dollar CAD. Dollar CAD, probably my least favorite. I think it's been a slippery pair all year. I'm not looking to force trades on it. I don't like the structure. IRBT, not sure what that is. Herschel bringing some good stuff. iRobot Corporation. Is that our vacuum stuff? Durables, electronics, appliances. Pool cleaners, robot vacuums. Oh man. Herschel's getting into AI for the everyday housewife. That was offensive. I'm sorry. House life. How about that? Look, I've always wondered, like, should I get a Roomba? Should I get an iRobot, shark vacuum, whatever? And I stayed in an Airbnb one time, and they had a Roomba in the basement, the carpet, and it didn't clean up anything. Like I literally was like putting stuff in front of it, letting it go over it, and it would still be sitting on the carpet. So I just think, I'm gonna vacuum my own place, and it's also a pain in the butt to map those things out. So that's just me. I don't mind cleaning my own house. Did they just get bought, Gary? I'm not sure. You want to check some news on it? Finviz. Let's go to what was it? I don't know. IRBT. IRBT. Okay, so any news? Amazon's acquisition there, Gary, on point, dude. Why Amazon's impending acquisition of iBot's bigger than you think. Amazon's acquisition. So does it help IRBT or does it help Amazon? Right? Probably more IRBT if they're going to hold their own stock, but if it's going to be absorbed and bought, I mean, this thing's trading at $37 and change. If there's an acquisition coming, one thing that is difficult is if we're trading options. Um, if you're holding option trades and there's just a merger, you may not be compensated accordingly. So if you own the shares, that's different. But if you're doing option trades, sometimes you are not rewarded the same way, unless of course they're like, okay, we're gonna value your stock at $45 a share, and then your call option is worth something. But I don't know. I think if you know there's an acquisition coming or possible merger, possible buyout, sometimes it gets a little tricky in the options world how things settle. So yeah, it looks like, let me see what that news is. Latest acquisition. So this is as of Sunday, so yesterday. Amazon offers $61 a share for iRobot over a year ago. They offered that. The deal is facing regulatory scrutiny if the buyout price is changed to $51 a share. Spread between the new terms creates a merger arbitrage opportunity. Hmm. It's unclear whether Amazon's bid to buy iRobot will win the necessary regulatory. Okay, so doesn't seem like it's all done yet. Timelines here: they offered 61, now it's 51. Now the stock price is trading at 37. Hmm. This has a lot of like Elon Musk and Twitter feels to it, right? Market got all excited and Elon's going to buy it at blah 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 price, and Twitter went nuts, like had a 20-30% move and then faded all the way back down. And is he going to buy it or they're not going to buy it? And I also want to know, like, is this all it is? Are they just buying these little tiny vacuums, or is there more to it? Right here, close at 36.91, creating an unusually high spread percentage between the stock's trading price and buyout price, roughly 43%. The market seems to be pricing iRobot as if the deal is unlikely to go through. Oh, interesting. Doesn't mean the deal is dead. Okay, that seems. I don't know, man. That seems a little risky. That's a huge gap. But if it's not done yet, maybe that price keeps changing. And like I said, be careful if you're trading options, because sometimes those settlements don't pay the same way. So it looks like if you're going to take a risk on IRBT, I would go into, let me see if that's a fractional share opportunity. I can trade some Schwab slices. Maybe I can throw like $500 at it. Trade slices. Let's see if IRBT is sliceable. IRBT. Nope. So not sliceable. It's going to be whole shares. Which, I mean, again, okay, so I can buy 3 shares for, $100 or so, but okay, $100 turns into $143. I don't know. It's risk. Take your pick, but good stuff, Gary. Glad you're on point, man. Um, Angela says, I got a Roomba that was for pet hair. It's the coolest part of watching it go under everything. Wood floors. Gotcha. 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 Yeah, the one that I was hating on was on carpet. It was, like I said, Airbnb in the basement, carpet, and did not do a great job. But maybe it was low on batteries. Who knows? I'll give it a chance. So that does present an interesting opportunity. I mean, if it's bought at $51, that's a huge jump for, 13, $14 a share. But I don't really want to tie up $3,700 in cash or margin to make a trade like that, especially if it doesn't go through and all of a sudden the stock price drops and it's dead in the water, you know? So, okay. EuroCAD. All right, Trish, we'll take a look at EuroCAD. UHC, so healthcare and Signet and talks. That's probably going to happen. I talked about this a lot the last couple weeks. I mean, some of the content I've been listening to, we've got a lot of stirring going on in the private sector. A lot of valuations are unicorny. I think there's going to be some potential trouble brewing in the private sector with valuations. They don't have to go mark to market the same way as public markets, and that could be a huge problem. On top of that, the mergers and acquisitions, the concentration. I think this happens in tech in a big way. I think this happens in energy in a big way. This could happen in a lot of sectors in the next, couple of years. So healthcare could be one, technology could be one. Large cap could just be consuming small caps like crazy. Who knows? So it's definitely going to be interesting times we're going to be navigating. The one thing I think I said this on Friday in a video. Election years. I think I have this screenshot. 2024 presidential election year. I've got it right here. Since 1928, the S&P has delivered a negative return only in 3 election years. Okay, so we've had of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 out of 24 election years since 1928. We've had 3 out of 24 negative years. 2008, obviously, that's a rough one. 2000, that was a rough one. Oh, interesting how those are crashes, right? We had financial crises, a dot-com burst, and a great financial crisis to give those negative returns during an election year. But S&P has been positive 83% of the time during election years for an average gain of 11%. That would be a melt up, right? That'd be a melt up. And it wouldn't surprise me if we get it. And again, maybe we have a pullback first, but we have a melt up coming through 2024. We're going to find out. All right. So, market's ripping, inherently bullish. This is, seasonality in December. So the first 10 days versus the last 20 days. Usually December 11th through the 31st are pretty bullish with more holiday drifting. That was just a couple of things I found last week. So that's the dealio. Trish, yeah, Amazon gets more eyes in your house. Yep, probably eyes and ears. It'd be now your iRobot's listening, just like Alexa. Okay. All right. It's 10:03. I'm going to switch gears to the trading room for equities on demand. Thanks for being here. Happy Monday. Nice to see everybody. I appreciate you watching. If you would do me a favor, please, if you'd be so kind, hit the thumbs up button for me before you go. Leave a comment. All that's been great. Thanks for being here. We'll be back on Friday to wrap up the week, and I'll see everybody this week in the trading rooms, Flex Trading Room, Equities on Demand. Have a lot of classes this week as well, and back at it. Okay, sounds good. Take care. And if you didn't get a chance to check out the video on Friday for the Trader's Path 100%, please check it out. And I'll see you soon. Thanks. Bye.